In 2017, a banking crisis hit Ghana, shaking the foundation of its financial sector and resulting in the collapse of several banks. What triggered it? How did it impact Ghana's economy? And where does the banking sector stand today? Let's dive into what happened in the Ghana banking crisis. The story begins during a period of rapid banking expansion in Ghana. From 2010 to 2015, the country's financial sector experienced a boom. Banks seemed to be opening everywhere, and credit was flowing freely with little oversight. It was part of a broader economic growth wave driven by Ghana's oil discoveries, strong foreign investment, and a growing middle class. But there was a problem beneath the surface. While new banks and non-bank financial institutions kept popping up, many weren't financially sound. Some of them had weak capital bases, limited risk management practices, and inadequate levels of corporate governance. Ultimately, these banks were taking on a lot of risk, and the cracks would soon show. In 2017, the Bank of Ghana decided it was time for action. An audit revealed that several banks were undercapitalized, had high levels of non-performing loans, and were not following best practices for managing deposits. It was a ticking time bomb. The central bank initially revoked the licenses of two banks, UT Bank and Capital Bank. Both banks had been struggling with insolvency for years, relying on central bank assistance to stay afloat. Eventually, the government had to step in, consolidating these banks with Ghana Commercial Bank to protect depositors and prevent a broader panic. But the crisis didn't end there. In 2018, 5 more banks, Beige, Sovereign, Construction, Unibank, and Royal Bank, lost their licenses. The central bank formed a new entity, Consolidated Bank Ghana, to absorb these failed banks and safeguard the savings of their customers. This was one of the most dramatic interventions in Ghana's banking history. So, what caused this crisis? There were 3 main factors. Many banks were plagued by poor governance. Some executives engaged in self-dealing, using depositors' funds for personal investments. In some cases, large loans were given to politically connected individuals or companies without proper collateral or repayment plans. Despite warnings, Ghana's banking regulator was slow to act. Banks often operated without sufficient capital, and regulations around loan quality were either overlooked or not enforced. Non-performing loans that were unlikely to be repaid, were a massive problem. Ghanaian banks were left with huge amounts of bad debt that eroded their capital base, pushing many into insolvency. The Bank of Ghana moved to implement major reforms. They set a minimum capital requirement for all banks, improved corporate governance standards, and increased their supervision of banks' financial health. The government also established a bailout fund of about 12 billion Ghanaian cedis, or roughly $2 billion, to support Consolidated Bank Ghana and ensure depositor protection across the failed institutions. The Ghana Deposit Protection Act was enacted to safeguard depositors from future collapses. This law requires banks to contribute to an insurance fund that protects depositors in case of bank failures. The banking crisis didn't just shake the financial sector, it affected the entire economy. Confidence in banks was dented, and thousands of people lost their jobs. The government's bailout increased the national debt, impacting Ghana's fiscal outlook. But there have been positive signs since the crisis. The banking sector is more resilient, with fewer but stronger institutions. The Bank of Ghana continues to monitor and regulate the sector more strictly. Investor confidence has started to rebuild, although scars remain. The Ghana banking crisis was a painful but necessary wake-up call for Ghana's financial system. The country learned tough lessons about the importance of regulation, good governance, and risk management. Today, Ghana's banking sector stands on firmer ground, but vigilance remains key to avoiding another crisis. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more insights on global financial issues.